All right, there you have it, the sound of the closing bell at the New York Stock Exchange. It was a good day for the Dow Jones. Stocks are up roughly 750 points. The NASDAQ and S&P 500 also had a strong day. Both are up more than 2%. For more on all of this, let's bring in Brian Vendig. He is the president of MJP Wealth Advisors. Brian, welcome. Thanks very much for being with us. So it's interesting to end the week on an up note. Tell us what was driving the markets today.
Absolutely. I think investors coming into earnings season, which has been going on throughout most of October, we're very pessimistic. And I think what we saw in today's earnings and investors reflecting over the quality of earnings is that the news that's been reported is not as bad as investors have thought. And when you look at revenue beats year over year, with revenues growing about 12%, which is primarily influenced by inflation, and even though earnings have declined about 2% on average, investors are still comfortable with valuations, and I think started to nibble at today's valuations and looking at them as being attractive.
It's interesting because we also saw the Wall Street Journal reporting earlier today that the Fed is set to raise interest rates by another 75 basis points, but will consider slowing down the hikes as we head into the new year. How realistic do you think that is, given what we've seen with this pattern of inflation?
Well, that report today definitely factored into a little bit of the narrative with investors being optimistic in taking on risk for the longer term. Because the hope is that as the year goes on, the Fed might pause and take a step back as further inflation reports come out. I think right now it's really a jump ball still. And as we've seen from the report, really a debate between the Fed officials, because they need to see another report or two on the inflation side, knowing that there's some dynamics of inflation that are coming down, but we're still seeing that energy prices are going up, housing prices are sticky, and also people are still getting paid more year over year and keeping the labor market very tight. So I think optimistically, we would hope that by December, the Fed does continue to fight inflation, but maybe raising interest rates at a level lower than the last couple of meetings, which have been at 0.75%. But I think we can expect that November meeting, we're probably going to see 0.75% increase again.
All right, we'll be watching closely. What about big tech? Because we've seen big tech stocks struggling recently. Today, Snap was down roughly 30%, and many of these companies are set to report their earnings next week. What do you expect to see there?
Definitely. I mean, we've seen from a lot of the companies, and Snap as an example, that with a slowing economy impacted by those interest rates that we mentioned before, we're seeing a slower spend from businesses as well as consumer, both in the retail and ad space. So I think when we look to next week, investors are going to be keen on critical reports from Alphabet, Google's parent, to see how their business model has been impacted by ad spending. And specifically, I would also highlight Amazon, knowing that mix has been an issue in that business as well. Do they have the right inventory for consumers to spend from an e-commerce perspective? Are people finding enjoyable content in their platform that is continuing to expand with the NFL as well as other programming? And at the same point in time saying, are there offsets for things such as spending from consumers with cloud businesses that still continue to grow? So I think next week's going to be really insightful and also a key indicator on how things are going with the economy.
Yeah, it's been really interesting to watch, as you mentioned, Amazon, watching football on Amazon on Thursday night, a shift and an evolution in that company. All right, Brian Vendig. Brian, thank you so much.
Thank you.